markets are all tumbling because of uncertainty. Investing, finance and business are all inherently uncertain, but there's a point where the risk goes from measurable to toxic. We're now at that point. It doesn't really matter whether what Donald Trump is doing is good or bad. If investors and business people have no idea what's going to happen next, they'll do nothing. And when they do nothing, recessions happen and markets crash. It is a bit encouraging that in each of the past few days, when share prices opened much lower, buyers came out and started poking around the rubble, bidding prices back up. This morning's initial fall was a bone-jarring 6.4%. Seagulls looking for cold chips then pushed the index higher till midday, and then it stayed where it was and closed 4.1% lower. Here are some of the biggest falls. Commonwealth Bank dropped among the most because it was overvalued, and mining and energy stocks like Santos and BHP were all heavily sold because commodities were smashed. Oil and copper down more than 6%, iron ore 3.8%, and even safe haven gold down 2%. And that's because markets are starting to assume a recession, certainly in the United States and maybe the world, because of that uncertainty. Asian markets were also smashed today. There's no afternoon bounce in Hong Kong. It's down 12% or more. Singapore and Shanghai 7 or 8%. Japan 6.5%. Korea 5.5%. The Magnificent Seven technology stocks, Alphabet, Microsoft, Nvidia, Apple, Amazon, Google and Tesla, are well into a bear market. They're down 26%. Just as they dominated the world on the way up, they're dominating on the way down. And while the US dollar is falling after Liberation Day, the Aussie dollar is falling more. It's down 5% since April the 2nd and dipped below 60 US cents today for the first time in 20 years, apart from the pandemic. And that's partly because markets are adjusting their thinking about RBA rate cuts. It's now expected that the cash rate will finish at 2.8%, which I suppose qualifies as the silver lining. And that's finance.